Construction and infrastructure group Accentuate has returned to profitability with headline earnings per share at 9.79 cents compared to a headline loss of 3.5 cents the previous year. And now joining us for a look at the numbers is the CEO, Fred Platt, and of course our market watchers, Suraj Sookdhew, portfolio manager at RMB Private Bank, and Drikus Combrinck, we welcome now, portfolio manager at PSG Konsult. Fred, just to start off, this is not a big company in terms of market cap, but it's perhaps a good indicator of a particular sector, construction. You do flooring, you do chemicals. Tell us how your improvement happened in those sectors.
Yeah, good morning. And we operate predominantly in the flooring business. We have a company called Floorworks where we provide, we have about 70% of the resilient flooring market, that being anything excepting soft flooring and tiles. Ceramics, we're not in that. We also have chemical exposure in terms of Saffic. What we're currently experiencing is within the construction sector, and I think I've alluded to that in my commentary, is that we are really starting to see a slight pickup in the areas in which we operate, which has really resulted in us increasing our volumes by 13% over the corresponding period. Obviously, we also had the disposal of the glass and aluminium business within these current figures, but certainly it's laid a firm foundation for us going forward.
Fred, the chemical division, I think, led the results into positive territory. The rest of the business, what will it take to get the rest of the business into a positive earning situation like the chemical division, like Saffic has done? And with that, looking at where your revenue comes from, I think it's about 2/3 from government contracts. Do you see any private sector pick up at the moment? We know central government is rolling out a lot of, or the plans are there to roll out a lot of tenders in the coming years. But what's still about the provincial and the more local governments? Are you seeing any pickup in awarding of tenders and contracts there?
Yeah, I think as far as the revenue is concerned and the growth, we've seen a 17% growth in the flooring business year on year. The chemical business obviously has picked up nicely as well, although margins are still under pressure within that particular space. With regards to private sector spend is still largely depressed. We are seeing spending in the areas of provincial government and specifically in the areas of healthcare and education, and that's encouraging. Local government is still a challenge, and I think there's a challenge with regards to facilitating the process of the awarding of the tenders and really just getting to the delivery, and that is the area of concern. But certainly we've seen quite a nice pickup at provincial level.
You say that your margins have been under pressure. To what extent have they been under pressure? Because that would be indicative of the kind of competition you face out there as well.
Yeah, I think the margins are under pressure for a number of reasons. I think firstly we have quite a lot of volatility within the currencies and within commodities at this point in time, which makes it quite difficult to plan. The other side of it is that it's tough out there, and you have to fight for every square meter that you put in. Within the flooring business, we've managed to maintain our margins relatively well. The chemical business has been more under pressure with regards to margins, but it is a very competitive market out there.
Suraj, I mean, all buildings have to have floors.
Yeah, I suppose from my side, the main concern is that you've got a massive exposure to government spend. And given what happened with Sanyati and non-payment, I suppose you would face similar kinds of risks to the business. And
fortunately, we're not as exposed as Sanyati have been, and interestingly enough, we do an enormous amount of work, as you rightfully say, with government. But our model, we don't trade directly with government, so we deliver our floor through contractors, and therefore our exposure is limited. And I think if you look at the control of our debtors book, you will see that it's very well controlled.
Okay, outlook moving forward, what kind of outlook do you have for this industry moving forward? Because you speak of a slow and gradual or consistent pickup within the industry itself, but also being highlighted is the fact that you're looking to diversify to an extent. You've partnered with India's leading water treatment company, and that to supply a comprehensive range of water treatment solutions to the South African market. And some would say, how does that actually fit into the Accentuate stable?
Well, yeah, I think that we see ourselves as playing within infrastructure. And that's really our competency. We have the chemical business, which manufactures for the flooring. We do screeds, adhesives, and maintenance products. It also does a range of other chemical products, and therefore we are involved in the same area with regards to the water treatment chemicals, and also within the infrastructure space. And that's an area that we are looking at growing. Obviously, we're a relatively small company, and our ambitions are big.